off, as most of us do with this kind of trading career, for, I don't know, since 1990, 91. And I've had an evolutionary process with my trading, just as everyone does in any kind of career. And what I want to share with you today is the stuff that I've been doing for the last 6 years. And Fibonacci Trader has been kind enough to set all this up so we can talk about it together. Fibonacci Trader is the main software that I use because it has the tools that allow us to do this kind of work. And that work is time and pattern and price working together on our charts. I know there are a lot of different experience levels here, a lot of different people looking at different types of trades, different types of securities to trade, various instruments. This work applies to anything that you can trade and chart. Okay, so we're going to have examples of all kinds of different securities and different time frames, and based on some of the questions people have asked me before this session, again, it sounds like we'll have a lot of other conversations, things I don't have covered in the presentation, about the advantages of trading on different time frames and basically customizing all this stuff to what you want to do with your trading and how to fit it into your life and into your experience levels. I'm a trend trader. Is there anyone here who doesn't know what that means? It's fine. Trend trader?
Yeah.
Okay. You don't know?
I don't know.
You do? Okay, cool. Well, generally, I put that in a category. There's trend traders, there are counter trend traders. Counter trend traders are generally trying to pick a top or a bottom in the market and looking for a big reversal. I focus more on the trend. Then there are scalpers, people who go in and out of the market very rapidly, and they're looking for congested areas where they can just go back and forth and back and forth, and for a very small profit. This kind of stuff applies to all of those types of trades. But my personal trading focus is more of working with the trend. So, by the way, the workbook you have actually is a reproduction of this PowerPoint. And the reason I'm not doing a nice big full screen slideshow thing is because what I'm going to do is minimize this a lot of the time and go and demonstrate what I'm talking about on live charts. Well, they're not moving today, they're not live, but they're current. So the reason I went into the trend trade thing, because I want to discuss how that fits into our goals. Okay, for my trades, I need to identify whether we're in a trending market or in chop. Okay, because if we're in chop, if you're looking at a market that's chopping back and forth, and you're trying to approach it as though it's a trending market, that's when you get your head handed to you. Okay, so it's very, very important whether you're trading from a 3-minute chart on Euro USD, or whether you're trading off a daily chart on something S&P related. You want to know whether there is a trend present or whether the market is just chopping back and forth. If it's chopping back and forth and you're a really experienced, versatile trader, you might say, okay, you know what? I can recognize that the market is chopping, so I'm going to switch to a shorter term strategy and do that thing where I'm getting a little bit of profit, a little bit of profit, a little bit of profit. You can do that. I don't personally, because it's tiring.
Yeah.
Okay, I find that exhausting, and just by the time the trend trades that I find easier come around, I'm exhausted, and that is the same thing whether you're trading 2, 4, 5 times a day or 3 times a month. If you have to manage a trade in a chopping market, if that's what you can do and that's what works for you, great. For me, I'm like, I gotta lie down if I do that. Okay, so I need to identify whether we're in a trending market or a choppy market. Okay, once I can find a market that is trending, I need to know where we are within that trend. Let's say we're in an uptrend. Market is rallying. Okay, I better do it this way, because that would be backwards. Market is rallying. I want to know if it's likely that we're about to get a pullback. Okay, because that's one of the big mistakes I see people making. Not a mistake really, it's just lack of experience, lack of education with it, is they go, wow, that market broke out. It's trending, it broke out, and then they buy, and then the market tanks. How many people have had that happen to them?
Oh, yeah.
Okay, and again, that's the same whether you're talking about a 2-minute chart or a weekly chart, because what's happening is the market has to correct at some point. So part of what we're doing here, one of the major things we're doing here, is we're going to identify a trend, and then we're also going to identify whether the market is due to correct, or if it's approaching the end of a correction, Is the trend going to maintain? And then we look for an entry. In other words, in a rallying market, we're going to identify support. Okay? We're looking for support. And when support is found and determined to be present on that chart and holding, that's where we're looking for buys to get in on the trend. Okay? So that's the identify support and resistance part, which might interfere with the trade also. Once you're in the trade, very powerful stuff we can do with this fib work is we can identify exactly what's in the way of the trade working out. So you're not sitting there going, I'm in a trade. Is it working? It's rallying. Do I get out? Do I get out now? Do I take my profits? I want to show you how to look at very specific prices where you know that's the key spot. If it can break that, I'm good to go, to hold it. If that level's holding, I'm going to look at a couple of other things to tell me if I should bail on the trade. Okay, so that's part of what we're doing here as well. And as I have there in that little indented point, these areas can also serve as signs of progress in the trade. Okay, in other words, once you clear that spot, then we have a target. Last point there. Then we have a target. You sit back. You try not to mess with the trade. You try not to mess with the trade. Micromanage. You say, there's the target. I'm going to do my best to hold it, to hold until that point. So that's what we're doing here. By the way, I did want to mention something, a little bit of change in plans about the workshop. A lot of folks here have been saying, oh, you know what, I have my laptop. I don't have Fibonacci Trader installed. Is it going to be useful? By Monday, I'd kind of like, if you want to work on this stuff, I'd kind of like you to have some charts running. So that we can work on some markets together, and I'll come around and like stand behind you and scare you. I mean, I'll help you to make sure that you're grasping, you know, how to actually use the tools to do this. So what you can do is, if you have a laptop with you, download the trial of Fibonacci Trader and install it. There'll be other two. If you're not prepared to do that here, it's no big deal. But what we're going to do also tomorrow morning, Carlos is going to be here at 8:30 with charts running, projector going, and he will be able to show you, answer any of your technical questions about the program, getting stuff set up and all that. We tried to do some of that in my chat room last week, but not everyone could make it to the online session. So I really didn't have much that I could cover with it at that point. So in other words, 8:30 tomorrow morning. If you have any technical, whether it's how do I install the program, how do I get it running for the first time, how do I open a chart, or your own questions, anything you want to talk to Carlos about, because he's leaving also tomorrow night. Okay, so if you have questions where you have to talk to him one-on-one, come in here tomorrow morning and he'll be able to set up a time with you to do that. Okay, so that's a really good thing, because what we don't want to do now is get into too many specific technical questions about the program, because everyone has their own, you know, place with it. So I just wanted to mention that. Next thing I just wanted to show you, and if you skip ahead to the page after this, it's going to ruin the effect, so please don't. You probably did already. Can anyone tell me what security and time frame this chart is? Not the next page, but this chart. Can anyone tell me what that is? What is it? Is it a stock? Is it a daily chart? Is it a 1-minute chart of butter? Nobody knows, right? Okay, there's a good reason, well, I hope a good reason why I have that chart up there. Actually, to answer the question, the next page will show you that it's a 15-minute USD Canadian. Okay, my point though, the reason I put this in here is because, again, I knew this group of people here, you guys, different levels of interest. Some of you are interested in daily, in getting into position trades. Some are interested in swing trades, holding something for a few days. Some are interested in currencies, some in the ES, you know, which I trade a lot of, the ES S&P Mini. My point is that this is a demonstration of how this work applies to anything. So if you're trading Forex, and I start talking about the S&P, don't let your eyes glaze over, please. I'm talking about the S&P in that moment because I found a good example to talk about the S&P. And there are people here who are more interested in the S&P. So I wanted to try to make this fair to everyone. But there's nothing specific. There's no point where I would say, you know what, if you're doing a Forex trade, running a Forex trade, you have to do this differently. than you would if you were trading the S&P. All right, so that's just my point with this is, we want to stay focused on the idea that this stuff applies all over the place. There are a couple of minor differences, a couple of retracement levels that work better on one thing or another, and we'll cover that when we talk about the meanings of the specific retracements. Any questions yet about anything that I've been talking about? It's mostly intro stuff, so I wouldn't imagine that there would be too many. And bear with me if I'm clearing my throat a little bit. I seem to be having an allergic reaction to something in the hotel, by the way. So, that's why I'm sipping. Okay. Is there anyone here who has not used anything Fibonacci related? No Fib. Okay. Astro? You have been using Astro?
Yes.
Okay. How did you like Tim's stuff?
Oh, good.
Great. Yeah. Some of the folks who are here were also in Tim Boss' workshop. Tim and I have worked together a lot as well, and we've found that our methods are very complementary because they're both keyed into numbers that mean something as far as whether it's psychological support and resistance points or whatever. So the two methods work very well together. Tim's stuff is great, but most of the people here have done some Fib work. That's good. I'm glad to hear that. Why do we use Fibonacci? Would anyone like to mention what appeals to them about Fibonacci? What got you into Fib? Anyone? Was there a moment when you looked at some Fib and said, aha?
Sense of order.
Okay. Yes?
It'll eventually get there.
It'll eventually get there? That's true. That's true. Someone mentioned to me before we started this session, and I've heard this a lot of times before, you put enough lines on a chart, something's going to get hit, right? Yeah, well, that's why what I try to do is have as little as possible on the chart as far as these lines. And instead of just having a whole bunch of lines, I try to interpret the most likely motion, the most likely direction of the market in question based upon which levels are holding and which levels are breaking. And with a degree of I don't want to use the word certainty, but reliability. Okay, remember, you cannot be certain ever about the outcome of any specific trade, but you can be very certain about your edge if you've seen that work out time and time again. So why do we use Fibonacci? I want to just discuss quickly some of the theories of why it works. Fibonacci numbers are an ever-present part of nature. You've all heard this before. 55 petals in a flower, the shape of a spiral galaxy, everything, the proportions of the human body, except mine because I have to lose some weight. All those things apply. Does that affect the market? Is this really some cosmic force? I don't know. I have no idea. It works anyway, but that's a common theory. But I'm not here to tell you this 618 level is really important because there's, it's the shape of a spiral galaxy. I don't know. I believe, number 2 here, Fibonacci ratios as a determining factor in math psychology. What I mean by that is that you have a rallying market, and it pulls back, and we've all heard, one of the most common spots for the market to hold on a pullback is 618, 0.618, 61.8% of the degree of the prior rally. Okay, now is that because everyone is looking at a chart and plotting 618? Maybe. Maybe, though, there is something in how human psychology works that if people are believing in this rally, when it pulls back that much, they end up going, you know what? It's supposed to be going up. So people jump in the market and buy because just by looking at that graphically, they're like, no, this is worth more. This is going to keep rallying. And it goes maybe too far. And then they go, okay, you know what, it has to pull back at this point. Some of what we're doing with the targets is what is too far? What is too far? Where is it likely to pull back? Last point, a lot of people say Fibonacci retracements, self-fulfilling. Well, it works because everyone's looking at it. Maybe. But if everyone's looking at it, then I think we better look at it too. Because if they are going to use that in influencing their decisions, we want to know about it. Okay? So that's, I just want to go over that real quick idea as to why this stuff may be important. This is just an interesting little rundown on the Fibonacci numbers. I mean, I'm sure most of this stuff is stuff that you've seen before, how the number series is worked out. You know where, for example, 1618 comes from, and 618, where those numbers came from. It's basically that, in case anyone isn't familiar with that, the more the series progresses, it averages out that each successive number is exactly 1.618 times the previous number. So that's where we get that magical, mystical golden ratio, the 1.618. Because basically you could just program a computer to say multiply this number by 1.618 all the way out to infinity, and what it will be doing is giving you the Fibonacci ratio sequence, Fibonacci number sequence. The other ratios. This is the little cute thing. It's not really crucial, but in case you're interested, you might like to know that 1.618 times 618 is the number 1. That's a very important number to me in this whole deal. Okay, 382 comes 618 times 618, and so on. You can see where these numbers come from, because that's a question people have asked me a lot of times at workshops. Where do these numbers come from? How did you figure those out in the first place? So that's the answer. Now, so where do we start? Where do we start? What's the most important number? Anyone want to volunteer that? What's the most important Fibonacci number?
1.
Thank you. 1. 1 is the most important Fibonacci number, and 1 is the basis of the first part of our actual work, our actual Fibonacci work. And the next chart, or the next slide, some of these printed a little funny, I noticed, by the way, in the workbook, but I think you'll be able to follow along with us. This is simply, these are support levels, and they are simply 100% price projections of prior corrective moves. Okay? In other words, we use a tool in Fibonacci Trader, the expansion tool, to measure prior declines and project from the new high. Because the theory is, the idea is, that if the market is trending on a pullback, if we want to see the rhythm of that market maintain to the upside, we want to see these levels hold. If the rhythm is going to stay the same, our price projection should hold, because the cycle is going to repeat. If you don't take anything else away from this session, these few days, but a concept, take this concept home with you and add it to whatever you're doing. Okay? So that would be, and this is what, I studied for a long time with Carolyn Baroden. I'm sure most of you have heard of her. She calls this symmetry. Other people call it measured moves. But she came up with, she didn't come up with that term symmetry, but she's popularized it. So we're going to refer to it as symmetry during these few days. This is symmetry support. In other words, if the rhythm is going to maintain, if the pattern is going to remain symmetrical, we expect these levels to hold. Any questions about that? So I can have a sip of something. Okay. Yes?
You're going to go over when to draw the lines from high to low, projected from the new high.
Oh, yeah.
Because if you've been exceeded by another high, that might cancel.
Yep, as a matter of fact, that's a couple of slides forward.
Okay, thank you.
Okay, and one thing, I don't want to confuse people, but we are going to show examples of what happened earlier in the trend. I'll show you what I mean when we get there. I don't want to, I want to show you some past examples, but I don't want to make it look like that's how we would actually do it now. At this point, on this chart, you would be only projecting symmetry from that point. You'd only be projecting from the highest high. One of the advantages in Fibonacci Trader, by the way, is that Carlos has programmed it so that if you're running, let's say you're running an intraday chart, a 15-minute chart or a 3-minute chart or whatever, when prices make a new high here, the program automatically recalculates and pulls these levels up for you. Projects from the new high automatically. Not much. Oh, sure. Yeah, that's why whoever wants to get into this, it would be a good idea if you had the program running. Not this second, but sometime over the next couple of days. And yeah, we're going to do a lot of stuff live on the charts. Right, I know probably, I don't know what percentage of people here have been over this kind of work before. I know a few people who work with me every day who I'm surprised are awake right now, because we talk about this stuff a lot, and I hope I'm not boring anyone by going into the basics this way, but I do want to bring us all onto the same page. with what we're going to be doing and working with tomorrow and particularly Monday. So yeah, that's one advantage of Fibonacci Trader. Actually, if anyone's interested later on, while it's not being recorded, I will tell you how I guilted Carlos into programming it so it automatically updates. Anyway, what else do I have here? Yeah, that's that. Here's an example of symmetry support in action. This is actually a chart from a few days ago, S&P cash daily. And you see what happened here. Prior declines projected from the new high. And that is, I thought I had put the price label here to show us what the low was, but that's what you want to see when you're evaluating getting into a trade. You want to know that symmetry support is holding. Price is coming down to it. It's holding. As soon as you start to see that bounce, you look for a trigger to get in the trade. Whether you're dealing with a 1-minute chart or a daily or a weekly. And that's actually what we have here. We have on this daily, and we're going to talk about triggers a lot, probably tomorrow, depending on how much time we spend on this stuff today. But that's exactly what we have here. It came down to support, and there's a buy trigger on the CCI stuff that I like to use. All right. What would have happened if this level violated? We have another one lower down, and violating this level would tell you the trend is a little bit in question. Just like if you had taken these guys, high to low, that was broken a little bit. So at that point, we were already saying, you know what? Maybe it's going to go short. Maybe it's going to trigger short, but it didn't. It didn't. We had other support hold. Had you taken a short up here, you'd have to look at that symmetry as danger zones on the way down. Places where the market had bounced before. All right, so that's why I'm also not wild about counter trend, because a lot of people are like, oh, it's the top, I'm going to sell, but they don't look at what's in the way too much, what they might be selling right into. This, by the way, this was the big sell-off. What are we talking about? 2007 and so on into 2008. This is an example, and this by the way is what I meant. These are projected from lows back up here. Obviously, at this point, let's say that we were currently, this was the outstanding low. All resistance would be projected from here. But I wanted to show you what sim holds can do for you. Symmetry resistance in this case. Corrective rally projected from the low. See that? It held. There was your measurement. If this is going to maintain a rhythm of a downtrend, you want that to hold. Okay? Move it forward, project from the next low. This one didn't even try to get close. Point is, you wouldn't have been able to think of it as an uptrend forming as long as that was holding. Move this one down again. Actually, these guys are identical. Move them down, move it down to the next low. That held to the cent. That held precisely. Okay? Push down into the low there. So it's very interesting stuff to watch, and that's why I'm saying if you're not doing anything, if you say Mark is full of it, when you go home, play with this and add it to what you're doing. Because it's going to, I'll bet a lot of the times when you take a trade and you're like, why did that go against me? Or, why I thought there was support there and there's no support. A lot of the times you're going to find that these numbers are going to help you a lot. They're going to show you exactly where that support resistance is. Yes?
Good question.
Sure.
So you're just using the first measurement, the first line.
Yeah, you know what? We'd have to reproduce I forgot exactly. Yeah, this one is the first line. I didn't want to get. You're right. I didn't want to get complicated with it. What you'd actually do, because it's in the past, this is all in the past, and it just would have been a mess. If you were doing this in real life, what you'd be doing is you'd be taking every bounce.
Yep.
Okay. As long as it made a new high here, you wouldn't take something, and that's part of my rules coming up. You wouldn't take like a little swing in here because it made a new high afterwards. You want to take the corrective rallies in the context of a downtrend. So you'd have several of these lines here, and when the smaller ones started to break, that's when you'd start to go, is it reversing? And you'd look at the chart and go, yeah, you know what, the bigger ones are still holding.
Okay.
So yeah. Okay, another useful factor. Here's where we put in our low. This is the same chart, move forward a little bit. Okay. So here we are into this year, and our major March low, which we had on the weekly charts, by the way, as a target. Let's take some of those corrective rallies again. And this time I do have them all projected from the low as an example of what you were just asking about, really. First one broke. Are we reversing? Okay, well, maybe we're looking at longs here. Maybe we took a long. Actually, on this chart, it triggered long. Here's a dangerous spot, but you know what? It blew through. Basically, by here, all of our symmetry resistance was gone. So there was our complete confirmation that the market had flipped back to long side. And again, you can do that on a weekly chart, or you can do it on a 2-minute chart, and it's going to look the same thing. So that way you don't, and up here we would be projecting the support already. What I wanted to do is show you, though, how the violation of symmetry confirmed that the trend was changing. Okay, so that's an important concept, and that's useful. You know, and again, someone asked me a question like, the fib stuff, does it work? Does it work? What do you want it to do? What do you want it to do exactly? In a case like this, it can confirm that the trend is holding, and if it breaks, it confirms the trend is reversing. So is that working or not? Because the level broke. It's telling you something. It's informational. So it's working in either direction, whether it holds or whether it breaks. There's something you can use there. How you use it, what you do to apply that to the market, is up to you. And it's also, you know, that's why we need momentum-based triggers as well. So, you know, that's why we have the whole weekend to talk about that. But that's also why it's very difficult to answer a question like, does it work? I've used fib and it doesn't work. Well, what were you trying to get out of it? Okay, here's just a reminder what I'm talking about with symmetry, why it's important. We're looking at the rhythm of the market, and that's what symmetry is, a visual indication of market rhythm. And we're going to get into more interesting uses of the other stuff that we're all used to thinking of as Fibonacci, the retracement levels, how those combine with the symmetry, because each retracement level has a meaning. And when you can have the symmetry come together with other retracement levels, that's where you know that's the most likely area that's going to hold. And it's the most important area if it's going to break. All right, now here's for Fibonacci Trader. And if you're not using Fibonacci Trader, again, you know, you can definitely install a trial. But if you're not, I love the stuff my broker gave me, you're looking for something probably called an expansion or projection. Okay, in Fibonacci Trader, it's called the expansion tool. It looks like this. I don't know what that is. I have no idea what, I've been using this program now for 6 years, and I don't know what that symbol is, but that's the expansion line symbol. I can't guarantee that it's a vertical, you know, it depends on how you arranged your toolbars, because you can drag the toolbars in the program wherever you want them to be. So it might be a vertical one, but that's the one you're looking for. And this is how I have my tools set. Okay? You open up the edit for it. There's a couple of ways of doing that. If anyone is set up with, I mean, when we take a break in a bit, if anyone has the program running now and needs to find how to open the edit thing, just let me know. And this is how I have them set. This stuff I don't use in expansions. These minor ratios. The most important one, again, is the number 1. Okay? I have it in red, primarily because I learned a lot of this stuff from Carolyn, and she had it in red, so I got used to it. But red essentially is like a stop sign, at least in this country. It's a stop sign, so you're saying if the rhythm's going to maintain, you want the red level to hold. You want the market to respect it and go stop. If you're comfortable with another color, that's fine. But so that shows up on my charts as red. And that one is selected to show. I also have 1272 and 1618 in there. Our other important ratios. Those are not active. They're turned off. I just like to have them ready to turn on, so that if I feel I need them, I can pop them on there without having to really mess around with all the settings. And that's the notes are here about that. There's a thing in the program called a magnet, which is very useful. I'll show you actually after this slide. I'm going to minimize this, and we're going to play with a couple of these live. The magnet makes certain that you're selecting the exact highs and lows on the chart. Most programs, again, don't have that feature, and you kind of have to go, is that in the right spot? You know, or you draw it wrong and the levels don't mean anything. So let me just show you, for you guys who have Fibonacci Trader running, or you're using some other tool, Let's just grab a chart here. Okay, we don't need this thing open. Okay, well here's our S&P cash daily. This one's just on the screen. And again, if we were going to do Symmetry support now, we'd be looking down to, like the major reversal point back here at, I think that was the start of March, right? Yep. And we're going to take that expansion tool. There it is on mine. I have mine horizontally. And we're just going to take these prior corrective declines, high to low, projected from the new high. You can take this one into this low here. And so on. That's all there is to it. And like I said, the program, if we start making new highs, the program is going to project these, it's going to pull them up, make them higher. So you don't have to erase everything and start it over again. That's interesting. This is almost overlapping. Let's see. If you hover over the levels, it's going to give you that nice little tooltip window. Yeah, that's not exactly an overlap. It's going to give you a little tooltip window so you can read the prices. You can also hold down Shift and click on the price levels to leave a label there, because when these guys are that close together, it becomes very difficult to read. And that's important when you're dealing with faster markets. Like if you're trading, a 3-minute currency chart, you want to be able to read what levels are important. That's basically it as far as how we're doing this stuff. Now what I'll often do, this last one is a little bit deeper than these guys. Okay, see these pullbacks are more shallow. They're from earlier on. Just listen to this logic for a second, okay? Because this is something I came up with. These more shallow pullbacks, projected from the high, had been broken by this decline. In other words, if I were to project this earlier high to low from this high, you see how that broke on the way down? So I had to ask myself, why the heck then am I projecting it again if that support has already been violated? Projecting it again because if the market is actually going to accelerate, time and time again you will see it pull back to one of these levels that had been broken previously, and it will hold and bounce from there. So you don't want to discount these levels completely, because the market is possibly going to accelerate to upside when one of these is held, and it's actually going to match the strength of the prior rally. So what I do then is I go to the last one, the deepest pullback that has been unbroken, and if you right-click on that, you hit emphasis, okay? Because that is the strongest level. If we start to trade short before that time, you'll want to ask yourself, do I have enough room? If that strongest level is going to hold, do I have enough room to make a profit before that level is hit? Or if you're looking for the trend to continue, you're going to look to see to have a buy at that level, even if these prior levels have broken. Okay, does that make sense? You all got that? Any questions about what I'm saying here? No questions. Okay. Either I'm going way too slowly or way too fast.
Can you go over that again?
Yep. Yeah, not only will I go over it again, but I will we'll be doing it live together too, so there'll be plenty of times to get into it. In other words, let me go over this one.
I have a question.
Oh, sure.
I don't use Fibonacci Trader.
Okay.
Anyhow, your red levels are the 100 or the 1. Right? That's
Same thing, 100% or 1. Yep.
That's all you're marking right now. So those 100 or 1 is from every one of the high lows?
Right.
Oh, okay, so you're marked, okay.
Yeah, that's all I'm doing, because if the rally is going to be strong, if it's going to pick up, or maintain prior the strength of prior points, it could hold at any of these.
So those are for 4 different Fibos.
There are 4 different prior corrective rallies.
Okay.
Declines.
Right.
Sorry. Yes.
I think you right-clicked on one of those levels,
Yeah.
and it showed up which level it came from, I think.
Oh yeah, those black dots.
How do you do that?
You can left-click on it or right-click on it, and it's going to give you the reference. Yeah. As a matter of fact, I think I said that on the slide.
Is that the max?
Do I see your name there? I was checking your name tag because I think it's time we met.
Oh, yeah.
The magnet, yeah, no, that's actually showing which swings have been used.
Shows the swing
Yeah.
response to the left.
Yeah, exactly. Sometimes you have to right-click it, sometimes left, I'm not sure. There you go, see, that's going to give you the references. But if you go back, I think I said this, I should, you're going to want to put a note here if I didn't. Yeah, here, optional.
Right.
This one, leave show baselines checked. I don't have this checked on my charts because it makes the charts very messy. But this tool, if you leave show baseline selected, I'll show you what that does. It makes it easier to see where this stuff came from. Let me get rid of everything on here. And I need one drawn so I can open the edit. Here's one way you open the edit. You draw a level, right-click it, and hit edit. Okay. If I select show baselines and save that as default, yeah, this one's not a real level. So what's going to happen then is we're going to go high to low and project from the high, and you see it's going to show you exactly what was done. Okay? That's very useful when you're learning to do this. Once you learn how to do it, it becomes really massively distracting, I think anyway, because you have a whole bunch of them going on here. All right? But one reason why it's really helpful when you're learning is because it may be an unfamiliar motion for you to make, even to do that on your charts. So what I see time and time again is that, I'm just deleting everything, is that someone says, why doesn't my level match what your level is? And because what they've done is something like this. They thought they were hitting the exact high, but they weren't. It landed on the next bar, okay? So at least that way when you're learning to do it, and you go, Mark, my number isn't the same as yours. You can, you don't have to come to me with this. If you have this open, the show baselines on, you'll see it just didn't hit the right bar.
Mark, are we still looking at a 15-minute chart?
No, this is an S&P cash daily. We can look at a 50. We can do the same thing on the 15-minute. Doesn't matter. Yeah. Sure.
Are we going to go through this more slowly all the time?
Well, we're going to go through it. We're going to go through it over and over again.
All right, here's
because-
where I'm following your concept. But when I use fixed, my methodology is a bit different in that the levels I put in gives you a projection both of retracement and expansion.
Right.
What I'm grasping for what you're doing, you actually calculate or you follow the retracement, then you take the cursor to the high and project the next retracement.
Right.
So you're trading retracements. That's your
Yes.
target, retracement?
Well, these are not, first of all, I wouldn't call these retracements exactly. Yeah, pullbacks, right. Okay. I'm not using, we're going to get to targets. I use different tools for targets.
So based on what you're doing, in this case, we are able to make, pips based on the pullbacks, and then later you're going to add the expansion.
You would make the pips based on the pullbacks if you're a counter trend trader.
So is this
Okay.
a counter trend trade?
No. What I'm trying to show here is the idea that we're looking for the trend to continue.
By bouncing at least.
Right. If you're comfortable being a counter trend trader, you would use them as targets, okay? Or obstacles, things in the way, which obstacle target is kind of a similar thing, you know? What I'm looking for usually is for it to hold to take a long. Okay. This, by the way, is just the first thing we're going to talk about. That we're definitely going to add on to these. What you're going to get from me, hopefully, that's a little different than what you've seen in Fib before is how to interpret it. That's why I want to get this is mechanical stuff, all right? And I want to get the mechanical stuff out of the way today and part of tomorrow so I can try to share my head with you about when I look at a chart with all these lines on it, what does it mean? You know, what's more likely to hold and what's more likely to break. That's what my clients expect from me too, and that's what I do differently than the people I've learned from. I've synthesized the stuff. So this is just mechanical stuff. What you do with the trade, exactly, we're not up to that yet. Okay, and I saw a raised hand. Yes?
So you're only putting on the one?
At the moment, yeah.
Okay.
There's a specific instance where I'll use the others, and we'll get to that.
Okay,
And
and we're going from the low to the high and just showing
we're going from prior
prior high.
high to low projected from the high. Okay, and it's a 3-point tool. It's not a retracement tool. Connects 2 points, low to high. for example. As soon as you hear a projection or expansion, the key word, the thing you listen for, is the word from, because that means there's a third point involved. High to low from new high. So that's 3 points. And we're basically, the way people generally use the expansion tool or projection tool is there, and this is where it might get a little confusing if you're thinking this way. Some people will use, standard fib is to use the price projection tool to measure for a target, okay, in the direction of the trend. All right, I've found that those levels generally only work when they have other stuff that I have there anyway. So instead of having too many levels on the chart, I don't use that. In other words, what they would do is they go, okay, let's go low to high and project from this low, and we have a target up here at this point. That's standard fib method. I found it more productive to flip that around. Okay, turn it on its head and measure pullbacks to see if the trend is continuing and resuming. Okay, any other questions at the moment about this stuff? No? Okay, well, we got lots of time to go over questions. I'll bet the good questions will be when we're actually moving live charts on Monday. Yes? Sure.
You're just still using, when you're figuring your fib, you're still using your swing high, swing low to your high. Same thing, right?
Yep.
Okay.
Yeah, I'm not. I haven't even discussed anything that most people would consider fib yet.
Okay.
Yeah, this is a basic concept that, and that's why I introduced it as the number 1 being the most important thing. Most people don't use the number 1 in fib. Okay, so how do I justify that? 1618 times 618 equals 1. So the number is there. The first number actually in the fib sequence is 1. Everything is based on 1. So, but this is not the standard fib. This is not the fib your mama taught you about. We'll get to that stuff. And I think what's more important there. I remember when I first touched fib. This guy I studied with. When was that? I don't even remember because it was such a horrible experience. I think. It was somewhere around, I guess 1999 or 2000, and that was the standard stuff. Just take a retracement tool and draw a high to a low, and then the answer becomes, which one's going to hold? Is it going to hold at the 50% or the 382? And most fib educators say, I don't know. It should hold at the 618 if the trend is going to continue. Maybe, whatever. And that's why I threw fib out the window, because it was just something on the chart that really didn't tell me anything. What I want to impart here is how to determine which area is most likely to hold. See, when you hit that area that's most likely to hold, that's when you look at your triggers and go, is something momentum-based telling me that it's actually respecting that and flipping around in the other direction? So the core of that is the symmetry stuff. When we get into the actual retracements, let's say you have symmetry overlapping a 618, okay? And we're going to talk about the significance that I give to each of the retracement levels, and that's different stuff than you've heard before, probably. If you heard the same stuff from someone else, they owe me a royalty, probably. But no, actually, we all come to different conclusions about this in our own ways. Do you? Anything for me? All right, this is optional. I just want to show this tool to you. Again, this is a Fibonacci Trader thing that Carlos actually put in at other people's request. I don't use this tool. There is nothing wrong with using this tool. It does the exact same thing as the expansion tool. It's called multi-symmetry. It's near the symmetry, near the expansion tool. What this does, if you're trading a fast market intraday, this just takes fewer clicks to project the levels if you have a bunch of them. I'll show you what I mean. Let's go back to that chart. Let's assume for a second that this was a 3-minute, Euro chart, and market's rallying, and you want to get your symmetry quickly. Okay. If you use that multi-symmetry tool, what you do is you actually draw high to low, high to low, high to low. You just draw the actual lines first, and then you right-click above the last one, and it projects all of them at the same time. Okay. Yeah, it's cool, and it's all a matter of how what's important to you and how you determine what the market's doing. The reason I don't use it, like I said, there's nothing wrong with it at all, but I found that for my memory, personally, it's better for me to draw them each individually, because that way I remember which level was projected from which swing. I remember, again, this is just me, I remember what the swing looked like, how important it was in the rally. You know, and of course that's not something I expect you all to learn to memorize all that this weekend. I've been doing this for years. I'll bet if you start out with the multi-symmetry tool wasn't in the program when I learned how to do this stuff. So I learned the other way. I'll bet if you are interested in the multi-symmetry tool and you start off with it, it'll serve you just as well. But for example, I like to know which swing had a big impact on the market, because that might be the level that I make bold. And I just learned, for me personally, for my eyes, it's better to do the swings individually. But that tool is there, and that's what it's for. I see a question back there for Swag.
If you then click on that particular symmetry, will it go back and show where it comes from?
I don't remember. Good question. No, it doesn't seem to. Maybe, actually I can't even get an edit open on it. That's interesting. No, it's not really, see, it's not quite as versatile that way. What? Must be what, Carlos? Edit? Yeah. It's not, nothing's opening. No. No, I would have to, I'd have to go in and hit the, put the drawing tools menu back on to do that, I guess. But that's not what we were trying to do. Will was asking, you know how you do when you do the standard expansion and you click on the line and it shows you those little black boxes? Will was asking if it did that with this too, and it doesn't apparently. So, yes?
When you do the expansion tool, do you go from a high and a consolidation phase, or do, like, you got a consolidation?
Here? This?
Yes.
Yeah.
You take that high and it's just...
I take them both. What, Carlos?
Change to regular arrow, because the problem is two things, you want to draw more.
Oh, okay.
How do I click that?
No, I'm not trying to edit it though.
Okay, that's what we can do with it.
Yeah, okay.
Yeah, you can change the percentage there and see what's happening if that's 6.8.
Yeah, but that's not what we were trying to do. Okay. You just want me to do that? Okay. What we were trying to do was Carlos, what we were trying to do was something like the baselines. Okay, thanks. So that's, worry, yes. I'll be,
drawing the symmetry
yes.
From the left-hand side.
Mm-hmm.
Yes. Why? There's an ABCD pattern there.
Yes.
Okay. Which is the correct one to use for symmetry?
That's exactly what that's exactly what he asked. Yeah, both of them, and ABCDs we're going to go into a lot too. And one of the reasons, what I would do, I'm jumping ahead for everyone else a little bit. What I would do is both of them, and then the one from the larger swing would get emphasized. I bold the one from the larger swing. Okay, but the reason I'm doing, and this answers your question too, this is a Gartley pattern. A Gartley. Okay, and we're going to cover Gartleys as well for those who are not familiar with them, and maybe I'll give you a couple of tips even if you are familiar with them. But if this were just random noise consolidation, then I wouldn't use both. In other words, if this were, just doing this nonsense with another high up here and so on and so forth, I would take only one, the whole swing. But because that's a perfect ABCD Gartley, I'm going to take both this and this. Okay? And there's reasons for that. It's because I actually kept stats on that holds. The smaller one might hold as well. But the larger one is the more important. Okay, and again, that's something we're going to go over, as we have more and more charts to work with. So that's the multi-symmetry tool. I just wanted to throw that out there for anyone who is starting on this work, trading a faster chart. You might want to know about that and get started using that tool. I guess I'm just a little bit too much of an old fuddy-duddy to switch methods midstream. Okay. So any more? Did I miss anyone? Any more symmetry questions? At the moment. Yes, sir.
would you draw in the course of doing this, would you draw, say, from that peak right in the center of the chart to the low, and then the next one to the low,
Here?
Yes.
High to low?
Yes.
From high, yes.
Okay, and the next one?
Yes.
For the tire?
Yes.
Okay.
Okay, high to low from high, yeah. And again, because these were broken previously, in other words, if I went high to low and projected from this high, it broke on the way down. That's why I'll take the last one that was never broken and make it in bold.
Okay.
Okay?
I missed that.
Yeah, and the thing is, I'm going to go over, when we're drawing more and more of these, over the next couple of days, I will explain the reasons why I'm drawing and bolding, and so on each one. So we'll have, sometimes repetition is better than going very slowly on things. We can introduce other concepts instead. But I do want to explain what happened to my PowerPoint. There it is. Yeah, here's just, these are notes for you. I think these are legible. I glanced at a workbook. I got my own copy of the printed one last night for the first time. I think these are legible, but enough to see the concepts, but I did notice the print was a little bit weird. And this is just, again, to show you. In an uptrend, take the prior corrective declines and project from the new high. Okay, see this? Bump, 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 bump.
Yeah.
Okay, simple enough. How are these corrective declines? What do you mean corrective? Mark, if you knew in advance they were going to be corrective, then you have a crystal ball, and no, they're corrective because we're already up here, and new highs were made after. So by definition, those were corrections in an uptrend. All right, so you're taking prior corrective declines, projecting from there. Okay. Downtrend, other way around. Corrective rallies. You'd also take this larger one here. What I don't do, and I found this to be really a complete waste of time and clutter on the chart, this thing here, okay? What I will do is, I will take the last swing into the actual high, see this? And project from the low, and also the larger one, and project from the low, okay? But not each one of these little intermediate lows. That adds too many. And again, we'll go over that. I think the reason it's not on this chart is because that low is actually higher than that low, but it reminded me. In other words, you have this thing where it's zigzagging up into a high. You don't want the lows on each zigzag. You want the last one, and then you start thinking about larger swings. Okay, and that, if that was too vague, we'll have other examples of that. I just saw this chart and it reminded me that I did want to mention that. Yes?
You have that pattern where you have a double bottom there.
Mm-hmm.
You take the first leg,
you take the actual
retracement, or you take the last one?
You actually take, well, okay, this chart actually is a bad example. The reason I just came out with that whole thing about the zigzag and all that into the high was because glancing at this chart just now, I was like, gee, why didn't I take that swing? And now I realize that was actually a higher low. You need to have a lower low, and that's coming up in my rules of symmetry section. You need to have a lower low. If this low had been down here, that would have been another jump. But in an actual double bottom, you want to take the low that is before the actual high on the chart. In other words, if you have you might have a double bottom, but which swing ends up with a higher high? Obviously the second one, the second low in a double bottom. Because if it actually rallies, then it's going to be taking out the intervening swing high and so on. So you're going to take the second one in a case like that. That's not what this is, though, exactly, because this low is higher in this case. You need to have a series of lower lows. I think that's the next page, the rules of symmetry. I want to go over, because a lot of the stuff we're talking about now, yeah, that's actually 2 pages forward. Let me just mention this. A lot of things that we're talking about now, if you just memorize 3 rules of symmetry, you will be able to answer a lot of those questions yourself. Just wanted to mention, this chart is just a real quick example of how when you have symmetry on both sides, see, look at this. High to low projected from high gives you the support. Now that we're working down to the support, you start taking the low to high and project from the low. All right, so this is giving you shorter term resistance and longer term support. And basically, if you find yourself looking at a situation like this and there's not enough room between these levels to make a profit if it trades in one direction or the other, all you do is sit back and wait. Because the side that breaks is the side that is continuing the trend. In other words, if we break the support here, the resistance wins. Any concept of this being an uptrend has been invalidated with this support break, and it's just going to keep going down. If the support holds, you wait for the res to break, and then you're validating the idea of the uptrend. That's something else you can do with that.
When you went from low to high, don't you usually do the downtrend that we didn't know at that point?
As soon as the prior, actually you did. Here, as soon as that swing low is exceeded, in other words, right here, you'd start projecting it. As soon as that swing low is exceeded, you start projecting it. So
You got a lower swing low to take out the previous low.
exactly, and that's in the rules of symmetry too.
Downtrend, okay.
Yeah, I think I have a couple of questions. What's up, Will?
Just out of curiosity, do you ever change the colors when you're in those time ranges? I get these red lines
Yeah.
above and below, and I try to remember where did that come from?
Right, yeah. You know what, you can play, I suggest that everyone play with the colors and make it the way you want it to be. My big thing is, I think I mentioned this in the chat room too, is I want a different color for the 786 because it's so important to me. Another thing you have to factor is that if you overlap the colors, they're going to change color too. You know, you got a green line and a yellow line, and it's going to be purple, you know, chartreuse or whatever. Yes, sir?
Break and support is defined as what? Two bars?
No, not it depends on the, that's, like I said, there are certain rules for different securities. That's one of the minor, depends on the security. A currency intraday chart, I usually use 3 ticks or pips, depending on, ticks if it's a futures contract, that's just terminology. Intraday, generally 3 ticks. Intraday. Daily chart, I want to see it close on the other side. And that's stuff we're going to go into a little bit later too. You know what, we're going to do, I think we're going to take a quick break, and we're going to do the rules of symmetry when we're back from the break, because I think we need to change the tape too, right? Yeah, and I need to rest my voice for a few